The day the Dow Jones was making new all-time highs and Jamie Dimon issues a warning, and it's much worse than inflation at a time when we're entering the weakest period of time out here for stocks. As we look at the first 10 days versus the last 10 days of each month, we can clearly see September is by far the weakest period of time for the stock market. I want to remind you guys of this stat from September 19th through September 26th. Look, we are only up 16 and down 34 times, going all the way back to 1974. And we can see every time we've had a 3% move or more during this time period, it has always been to the bear side. 9 times it has been bearish. Then when we look at September post OPEX, keep in mind, Friday is going to be OPEX. We are only up 16 times, down 34. But when we look at 3% moves, now we've had 7 to the downside and 1 to the upside. So will Jay Powell provide a little bit of weakness out here for the stocks? And then next week, we see him just simply bot right back up. That is a very real possibility. We come over, look at the fear and greed index. We are sitting at 51. We take 2 ticks closer over into greedy territory. Will Papa Powell be able to move the needle all the way over to greed or even over to extreme greed later on this week? Now, when we look at how the indices fared across the board, the Dow was up 228 points. The NASDAQ was down 91 points. The S&P 500 up 7 points. And the Russell 2000 up 0.78. We look at advancing issues versus declining. We had 63.8% of issues advancing on the day. And we come over and look at how the sectors performed across the board. We saw energy leading the way, followed by financials. Who do you think was the laggard? Yes, technology was the big laggard of the day, and that's why the Qs had such a hard time trying to move up in a positive way. And we look at the economic calendar for tomorrow. Tomorrow, 8:30 a.m., we have core retail sales coming in. Then at 10 a.m., we have FOMC member Logan speaks. Then it's going to be all about Wednesday, Papa Powell, 2 p.m. We have the Fed funds rate. We have the summary of economic projections. And at 2:30, Jay Powell is going to be giving his press conference, and that's where a lot of the fireworks happens when we're talking about FOMC day. Now, when we come over and look at what markets are pricing in, right now, we can see the market is pricing in a 59% chance the Fed is going to cut rates by 50 basis points. Now, why is this a problem? And that would be right here. Every time the Fed has went on an aggressive rate cutting campaign, that is signal there is problems with the economy, and stocks have suffered every single time. The market has not held up very well at all. So if you want to be bullish the market, fingers crossed, you are hoping Jay Powell only cuts rates by 25 basis points. Let me know in the comment section down below, how many basis points do you think the Fed will be cutting rates by? And this article kind of goes on to say exactly what I just said. The US dollar is weakening ahead of the Fed rate cut. This will determine what happens next, but the summary is the need for a large cut from the Fed would point towards growth concerns and economic troubles up ahead. And that's exactly what I talked about, not only verbally, but also when I showed you guys that chart where stocks are not doing well. It's not because the Fed just aggressively cut rates and hey, everything was fine. It was because the Fed cut rates because something was broken. AKA Jay Powell goes on an aggressive rate cutting campaign. We know that he knows something is drastically broken. We come over to today, look at the dollar index. Will this be a triple bottom, or are we going to see the dollar start to rally back up? Now, normally when the dollar is going lower, we see gold rocketing up. And today, gold basically had a candle of indecision. Do we start to pull back after completing the ABC pattern up? Or will we go ahead and complete this second ABC pattern that we had within an ABC pattern, which completes at 2670? Next, we jump over and take a look at crude oil real quick. Crude oil finally being able to close back above the swing high over here. So now the areas I'm focused on crude oil is going to be 71.44 up here to about 71.95. If we get back below the blue line right over here, which correlates with the swing point right over here to the left at 69.56, then I look for a retest of the recent lows that we've had. MACD indicator on crude oil is starting to firm up. Then as we come over and look at Apple, Apple struggled out here today. Apple gapping lower. When we look right here at this article, Apple stock slides as report suggests muted early iPhone 16 demand, aka the economy is slowing down. Now today on the live stream, I talked about it. When I went to Chipotle for lunch, normally there's a line out the door. I simply walked right up, nobody in front of me, ordered my food, and was able to get right out the door in a matter of minutes. Now, that is also a sign that things are starting to weaken in the economy. Now, if we come over and look at NVIDIA struggled a little bit today as well, down $2.32. If we look at this heat map right here, it basically lays it out very well. Apple was down, NVIDIA was down, AVGO was down, ASML was down. ARM was down, Amazon was down, Costco was down, Tesla was down. There was a lot of the high flyers out there down. Microsoft, Google, and Meta were able to eke out a little bit of gains. Meta was actually the one that fared the best today, and Meta is really on the verge of potentially breaking out of this upper level area. And we'll see, will it get the juice? Will Jay Powell pour some rocket fuel on Meta so we can go ahead and blast up into space? I want to make everybody aware Apex extended their 80% sale off all their evaluation accounts past in as little as 1 day. And what's even better about this, there's only $85 activation fee on all accounts. If you want to take advantage of this offer, use the link in the description box down below and use promo code Mike at checkout. Now, when we look at the indices across the board, the Dow not only made an intraday new all-time high, but also a closing new all-time high. Now, if we start coming back below what was previously the all-time high, watch out. We have a gap from today that could potentially get filled at 414.94. Then right down here at 412.01 would be the next gap lower, which is just below the current price. Next, we come over and we look at small caps today. And what do we see? Well, small caps closing kind of with a doji-ish candle with a wick on the bottom, a much larger wick on the bottom than the wick on the top. However, we saw this gap out here from last week at about 211.62. We look at the MACD indicator, very close near the zero line. And now what I'm looking for is this going to produce a lower high? What I mean is we have a high, lower high. Will this be another lower high? If indeed, then we're probably going to go substantially lower, because then that would set up an ABC pattern to the downside, bringing us back towards these recent lows that we've seen. However, if we can crack above 222.56, then we have an ABC pattern on the way up, taking us above the highs from this year at about 230.02. Next, as we come over and look at the QQQs real quick, basically a candle similar to what we just saw on the Russell 2000, kind of a doji candle, but we have more of a wick on the bottom. So we were able to recover some of those losses from today. Then on the 4-hour chart, we see we had a hammer candle. Then we had a little bullish looking candle on the last 4-hour candle. MACD indicator is crossed to the upside. And if you're looking to be bullish, well, one of the targets would be looking for this gap to fill at 475.41. And we look right over here to the right. What do we see? We have a high volume node off of the composite profile as well. Then we dive down and look at the 1-hour chart. What do we see? Well, MACD indicator is crossed to the downside. And we got to look, if we do not come up and fill this gap, that's going to produce a lower high, and that could set up some type of ABC pattern on the way down. On the 30-minute chart, MACD indicator making its way down towards the zero line. We're not there just yet. If you look at one of the areas that we drew out in this morning's live stream, the first 30 minutes of the live stream, we do market analysis and then we get into some live trading. But this was a zone that we came into, and we gapped right into that zone this morning. Now I'm going to go ahead and remove those drawings because we have another minus development area from today. I want to go ahead and draw this out. That's going to be somewhere in this ballpark right here. That's anywhere from about 472.41 down to about 472.00. If we start to pull back tomorrow, then I would look for the market to essentially consolidate here or bounce up and out the first time we come into it. If we come down to it, we bounce and we come back in the second or third time, I then look for that structure to simply get broken to the downside. Now, we come over and we look at the futures markets real quick. On the 4-hour chart, you can see we start to have a little bit of a roll effect. We have quite a few wicks down here on the 4-hour candles, and it's even more obvious. We come down here and we look at the 30-minute chart. We were talking about this today during the live stream. We have lots of wicks to the downside, and then we finally got a little bit of a relief rally on the way up. Now, this afternoon, I was looking for the rotation all the way back up towards 695. However, we didn't make it all the way there. We kind of ran out of time. Now, when we look at this, we do have a minus development area right here as well. This is an area we'll want to focus on tonight or tomorrow. That comes in about 19,633 to about 19,625. Now, value area high is going to be 19,694.00 with the point of control at 19,661.50 and value area low coming in at 19,589.50. Now, if we break above value area high, then I'm going to look for the market to come right back up here towards the swing point over here at about 19,718. If we can get above that area, then I look for a retest of the highs from today and then even a retest of Friday's highs as well. But if we start to come back down and you're looking to get long, this area right here, first time we come into it, expect some type of reaction. Either we go sideways or we reject up and out. Now, there is a shot that we go through it, but this is why we want to look at candlestick structure on smaller time frames. Do we come down here, start showing signs of a reversal, and then we push up and out? If we break through it, then I look for the market to come down towards value area low. Now, we come out here and we look at the daily chart out here for the SPY. Now we've had 1, 2, 3, 4, 5, 6 consecutive up candles in a row. Consecutive is the key word. The more consecutive candles, the closer we are to getting a pullback in this market. Out here on the 1 hour chart, we already had the MACD indicator cross to the downside. We have a potential for a double top with divergence. Now, that by itself does not mean the market is going to pull back. We look out here back on the daily chart. Notice we are not that far away from all-time highs. Then as we look at the 30-minute volume profiles, notice we have a minus development area right here on the profile, which is anywhere from about 561.93 down to about 561.69. First time we come into it, I expect the market to either reject out or consolidate near that area. And if we can get above value area high from today, which is roughly right around the high, look for the market to go ahead and run and see, can we make another new all-time high? Will it be Jay Powell that causes a pullback in this market? Or are we going to break the norms and maybe just maybe this time is different and we're not going to see a period of weakness in this market? Now we come over and look at the 4 hour chart for the S&P 500. We have quite a few wicks down here. And if we really start giving up this area right here, if we start breaking back below it, keep in mind, I will want to focus on this high volume node at about 56.58 and then down here towards 56.27. Anything below that, I would want to focus on the retest of value area high from last week at 55.91.75. Now, as we come over and look at the 30-minute chart real quick, notice value area high comes in at 57.02.00. The point of control will be 56.96.50 and value area low coming at 56.83.00. Now, we also have a very small minor minus development area down here at about 56.91 down to about 56.90. First time we come into it, I expect the market to bounce out. So tonight, if we start seeing a little bit of weakness during the Asia session, look for the market to come in there and then project and then potentially reject back out or consolidate. If we consolidate and we break lower, then I'll want to turn my focus down towards value area low as a potential target to the downside. Now, if you guys want to learn what is prohibited with my funded futures prop firm, make sure to watch this video right here.